Okay, so in this video, we'll be looking at the financial statements of PhilHealth or Philippine Health Insurance Corporation. So they do provide this in their website again, and I will be providing the links in the description of the video. And so let's begin with their interim financial statements as issued. I believe this is the latest financial statements that they have in their website as of September 30, 2020. And then their financial statement for the year 2020 is not yet available. So we're going to go over their financial statements for 2019 later on, and then just to check the contents, their notes, and the breakdown of the particular items that they have on their financial statements. All right. So for September 2020, these are their, financial figures. So for their statement of financial position, so they have assets, cash and cash equivalent, 5 billion, so a decrease from 11 billion in 2019 to 5 billion this year, last year, but it's only for 9 months. Anyway, this is balances of these accounts, real accounts as of a particular date, so it doesn't really it's not really comparative, right? Investment in time deposit, so we have 75 billion, an increase from 70 million the previous year. And then we have premium receivables, net 34 billion compared to 9 billion the previous year. So I think this is because of the pandemic. There are a number of members who haven't been able to contribute to the fund. And then we have other receivable. This is the IRM. So they disbursed around 14 billion as advance payment to hospitals, medical institutions, and healthcare providers, and yet some of them do not need it. Some of them are not qualified or eligible to receive such advance payments because they have unliquidated payments, or they have pending cases of fraudulent activities or whatnot that are still pending, and they've been sanctioned with temporary non-receipt of any benefits from PhilHealth. So we have here about 7 billion that are lodged in the account other receivable, right? And then we have other current assets, almost comparable to the previous year, 1.8 billion. So total current assets, it's 124 billion compared to 92 billion the previous year. Non-current assets, we have investment securities, so an increase to 137 from 124 billion. And then property and equipment, comparable, probably not much acquisition, probably depreciation is the difference between these. So we have 3 billion from 3.4 billion. And then we have intangible assets, net 225 million from 267 million the previous year. Other assets, 258 million from 264 million the previous year. So total non-current assets, 141 billion from 128 billion last year. So there's essentially an increase, right? So total assets, 265 from 221 the previous year. But of course, there's still 3 months for the year 2020, in which case there might be some disbursements of assets for the claims of benefits. All right, so this is probably going to decrease until December 31, 2020, which would make it comparative with this year. Then we have liabilities, current liabilities, benefit claims, 107 billion, 75 the previous year. Why is it that they have a lot of claims? Okay, it's for efficient, when you say efficient disbursement or efficient operations, as much as possible the claim should be zeroed out or very minimal, because having this much lodged in this account, this means that this money could have been used by the hospitals, by the healthcare institutions to provide for their services, and so that they could continue their operations to provide quality service for their patients. All right, so it's very important for them so that it would not affect their financials in a negative way, that they receive these benefits in a timely manner as well, right? Other payables, we have 3.9 billion from 5.1 billion. So total, again, 111 billion from 80 billion. I believe this has ballooned because of the COVID pandemic, right? A lot of people who were not necessarily diagnosed, but what was it called? Who were confined to the hospital because of COVID. They are claiming benefits for that. So there's a very significant increase in benefit claims, right? But again, this is only the payable amount. We'll see the actual benefit claims in the income statement later on. Non-current liabilities, we have other deferred credits from 8 billion. It became 8 billion from 1 billion. And then 844 million of leave benefits payable from 849. And then we have insurance liability for lifetime members, 28, same amount, right? 28 billion. So total non-current liabilities, 38 billion from 30 billion the previous year. Total liabilities, 149 billion from 111 the previous year. Members' equity from 109, it became 116 billion, right? Total liability and equity, you got 265 billion from 221 billion. Okay, and then we have the statements of income, total premium contribution. So essentially there's an increase, and this is also as of September 30 only, right? And for 2019, they only collected 108 billion, but this year, January to September, they already collected 112 billion. So from October to December, they probably collected more, right? Benefit claims expense, of course, there's an increase because of the pandemic. This is explained because of the pandemic, right? So from 84 billion, it became 109 billion. But then again, this is only until September, so there's still 3 months from October to December. Gross margin from operations, so we have 23 billion. The previous year, currently for 2020, it's around 2.5 billion only. And then other operating expenses, personal services, 2.6 billion currently, and then you have your 2.3 from last year. They probably, what do you call this? I think they probably hired more employees because of, the tracking. I'm not sure. Wait, that's for the OH to do, not PhilHealth, right? So why did they have so much increase in personal services? I'm not sure, and considering as well that this is only for 3 months, right? Or is this, I'm not sure if the 2019 is for a period of 1 year or also for 3 months, 9 months. They did not specify, but I'm assuming this is for annual figures. All right. And then we have other operating expenses, 1.4 billion from 1.6. Okay. Net operating loss for the current year 2020, 1.4 billion loss. Previous year, it's an income of 19.7. When you think about it, the income from the previous year could cover the net loss this year, so it should not be alarming yet at this point, or it should not be a great cause for concern, right? Because you have your previous year covering for this. Add interest income from 5.6 billion to 6.7 billion. So net income essentially is, still positive, 5.2 billion, but a significant decrease from 25 billion the previous year, right? And then you have your statement of changes in equity 2019 from 121 billion to 116. So essentially there's a decrease because of, what's this? Surplus, net income, surplus transfer to reserve. Okay, not that. What do you call this? Okay, so we have the statement of cash flows received from premium. Previous year we have 118, and then this year 95 billion. Oh, okay. They only collected 95 billion, although the income that they declared is around how much? 112 billion. Okay. It would have been better if they're using, some sort of cash basis when recording revenues, so that it would not be, not really misleading, but in a way, why declare that much premiums when you haven't collected it? And there's also the possibility that it would not be collected for the whole year. So, anyway, this is again 2019. This is probably annual figures. 2020 only as of September 30, so there's still 3 months. So probably could collect more for the last 3 months, October, November, and December, right? So 95 billion, interest 7.2 billion, and there's an increase from previous year. Collection of other income, decrease from the previous year, 239 million only. Reimbursement of point of service, 1.4 million. Collection of rent, decrease from 364 to 163. Okay, so total cash inflow from 125 billion the previous year is only 102 billion this year. And then cash outflows, benefit of claims, essentially there's an increase again because of the pandemic. From 76 billion the previous year, it became 84 billion only for the 9 months, again as of September 30. And then payment of operating expenses from 4.4 to 5.2. Payment of bank charges, 4,751 to 59,809. Alright, total cash outflows, 90 billion from 80 billion the previous year. Net cash provided by operating activities, 12 billion, a significant decrease from 44 billion the previous year. But then again, this is only for 9 months compared to the annual. Investing activities, matured time deposits, so 89 billion, matured treasury bills, 2 billion, matured treasury bonds, 16.9 billion, proceeds from disposal of assets, 14,196. So do you have a total cash inflows, 108.9 billion, which they probably converted this to cash so that they would have cash to disburse for the benefit claims, right? The previous year is only 4.8 billion in total. And then the cash outflows, when you think about it, right? So they converted these investments to cash, but then they also placed cash into certain investments. So these are probably short, not exactly short term, but at this point in time they're already matured or maturing, so they converted it into cash. Okay, but they also invested cash from their collections and placed them on several investments. So we have placement on time deposits, 95 billion. Previous year they only placed 54.6 billion. On treasury bills, 7 billion. Treasury bonds, from 1.4 billion to 25 billion. Accrued interest paid, 62 million. And then fixed asset purchase from 304 million to 133 million. Alright, total cash outflows, 128 billion. The previous year is only 56 billion. So net cash used in investing activities, cash outflow 19 billion. The previous year is 51 billion. And then from financing activities, trust receipts, 379 million. The previous year it's negative 20 million. So net decrease in cash or cash equivalents for the current year, decreased 6.3 billion. The previous year is a decrease of 6.9 billion. Cash equivalent at January 1 beginning, so 11 billion, previously 25 billion. So at the end of the period 2019, 18.17 billion. For September 30, 2020, it's 5.5 billion. Alright. And then we have the notes to financial statements. Okay, so they also have the notes for their interim financial statements. Okay, the other ones did not provide, only the face of the financial statement. So we're just going to go over this one and not the audited FS of 2019. Alright, but you can still check out the figures that they have for 2019 financial statements. Alright, so again, first note on to the financial statements, normally general information on the organization, how they are established, the laws, the RA's universal healthcare laws, their what they call this, attachment to the Department of Health, the funds, and other information pertinent to their existence. And then we have note 2, statement of compliance with Philippine financial reporting standards or accounting standards. Okay, we have basis of preparation, basis of measurement, summary of significant accounting policies. Alright. Then we have the different amendments to accounting standards. Okay, and then we have standards that relate to particular assets or particular items, like intangible assets, impairment, recognition, insurance, contingent, investments. Okay. So we have all these accounting standards, right, that apply to these particular items. Then we have the financial risk management, again as a insurance company, and this a public entity which manages the funds of the Filipino people. So they have the financial risk management that they use in order to protect their investment, their funds. All right. So you have these financial risk factors. You also have significant accounting judgments and estimates, for their allowances, amortization, depreciation. And then we have the cash and cash equivalents. Collecting officers, these are the amounts, petty cash fund, cash in bank, special savings in time, and then they have your deposits. All right. In time deposits, sorry. Special savings in time deposits. All right. Billions. Okay, so and then you have your additional information regarding the cash and cash equivalents. All right. Petty cash, special savings deposit, investments in time deposits. So these are the amounts. And then they also provided the terms 90 to 364 days with interest rates ranging from 0.875% to 3.1% and ranging from 3.325% to 4.31% for 2020 and 2019 respectively, right? Then we have premium receivables. 2020 we have from the formal economy, and then we have due from NGAs and then from LGUs. Okay, a total of 34 billion for 2020 and then 9 billion for 2019. But again, this is for September 30, 2020, so there's still 3 months to collect as much of this as possible, right? So the due from NGAs, they have a breakdown here provided. And then we have, I think this is the same breakdown. Breakdown for that particular account. Due from LGUs, they have this breakdown from the different regions, right? The receivable interim reimbursement mechanism, the controversy that they've been, tangled with. Board resolution approved the inclusion of IRM among the special privileges that may be conferred to the members during fortuitous events and emergencies. It provides a content of that specific resolution. But then we have the provision. There have been disbursements from March to June, but then the guidelines and procedures were only provided on May. Okay, and then you have the outstanding balance as of September 30 nationwide, 7.1 billion. Then you have your other current assets, supplies, some expendables, accrued interest receivable, and investments, and then other receivables. These are other current assets. All right. Details on the particular items breakdown. You have your investment securities at amortized cost. So in treasury bills, normally the percentage of interest will depend on the term of the treasury bill. So the longer the term is, the higher the interest rate. All right. So these are all this breakdown: treasury bills, the interest rate, and then of course their valuation for 2020. Investment in government bonds, period of more than 1 year, average rate of 5.6402%. So you have your retail treasury bonds, RTB, non-restricted, and the 10-year bonds. All right, totaling 115 billion. And then you have the investment in corporate bonds. They have a lot. Okay, totaling 17 billion for the bonds. And then what's the grand total for? Of all the investments in securities at amortized cost. All right. Then they have the property and equipment, what's being used in their operation, the buildings, the equipment, vehicles, land if they do, land and buildings. So they have certain details provided for the others, or some of them. You can also read that intangibles, normally for software systems or programs, total net book value 225 million. Okay, other assets, so you have your advances to disbursing officers and employees, prepayments, deferred charges, guarantee deposits, DBM, PCSO, PDIC, COA disallowances, PROs, unserviceable equipment, serviceable equipment. Okay, and then the others, land, receivable from DOH, NGAs, PCSO, LGUs, other intangibles. Okay, and then you have your allowance for impairment, 1.1 billion. Again, that's a lot. Okay, net amount, 258 million. And then what do you call this? Description or explanation on the particular items. This advances to dispersing officers and employees, prepayment schemes. They have the information right there. Low terms receivables from various agencies, and you have these receivable from LGUs broken down into the different regions. Allowance for impairment, so provided here for the receivable to them, 1.5, 1.1. I mean, all these are mostly, existing departments, existing organizations. So why is it that you're allowing, why do you have to set up allowance for impairment when these, if these are, legit claims, then there's no need for you to set up allowance, because these are government agencies. Majority of these are government agencies or GOCCs that, should be able to transfer funds properly if they are really due to PhilHealth. Benefit claims payable, so we have breakdown, benefit claims process, primary care benefit process, ICS, IBNR, PCB. Okay, and you have your descriptions. What's this? In course of settlement, incurred but not yet received, and then the PCB is primary care benefit, right? Other payables, so they do have a lot of other payables. Okay. If you want to read the details, you can do so. Again, the links will be provided in the description of this video. Okay, leave benefits payable. They have these rules to follow. Insurance liability for direct contributor, lifetime members. Okay. Essentially, these are, what do you call this? They are contributing members during their during the years that they've been working, and then the moment they retire, they no longer have to continue contributing, but they could still, claim benefits, alright? Or also, senior citizens. Members' equity, so they have this, reserve fund, and then you have your surplus, premium contributions. The details are breakdown, from the government, from the private sector. You have from enterprise owner, household help, kasambahay, migrant workers, informal sector, self-earning individual, self-employed, organized group, women about to give birth, Filipinos with dual citizenship, naturalized Filipino citizens, citizens of other countries, working, residing in the Philippines, foreign retirees, so you have a lot. And then we have indirect contributors being subsidized by the government, indigent, senior citizens, special government programs, Bangsamoro, Pamana. Sponsored, we have NGAs, LGUs, point of service, and others, right? Okay, interest and other income, from the investments that they've made. So you have different investment types, investment securities at amortized cost, special savings deposit, and investment in time deposit. Savings and current deposits, other income, they have accreditation fees, fines and penalties. Rent income, income from grants and donations, gain or loss on foreign exchange, gain on sale of property and equipment, sale of disposed and serviceable property, miscellaneous income. Okay, so they have all this. And then miscellaneous income, rent income, benefit claims expense. So they have the breakdown on who claims the most. Okay, essentially it's formal economy, total is 22 million, indigent 22 billion, indigent 26 billion, informal economy 24 billion, sponsored 4 billion, senior citizens 23 billion, lifetime 6 billion, interim financing mechanism 1 billion. Okay, so that's still large sums of money for each group, right? Then we have personal services. Okay, other compensation increased by a lot. I'm not sure if they have an explanation. They don't have an explanation on why there's a significant increase. Not necessarily a significant increase, but you can see that since this is only for September, there's still 3 months. So essentially the total of this would be much higher. And, there would be a noticeable significant increase in the personal services. So they have to provide an explanation, in the audited one. Other operating expense, maintenance and other operating, and financial expenses, non-cash expenses. Okay, breakdown of their maintenance and other operating expense. Travel, utility, communication, professional services, general services, repairs, maintenance, taxes, others. Okay, and then you have your financial expenses, interest, bank charges, other financial charges. Non-cash expenses, this account consists of the following: depreciation, impairment, losses. Other significant and relevant information as a government enterprise POS program. Point of service. Okay, they have this information. Arrears of the national government as an employer. Wow, 10 billion, that's a lot. Okay, assigned lot to PRO3, non-remittance of GSIS premium for disallowed salary adjustments. So what is been lodged to where? Was it in GSIS or in PhilHealth? PhilHealth share from military camp sales proceeds. Okay, so that's about it for the financial statement of PhilHealth. And then we have here their previous audited financial statement from 2019 with comparative statements from 2018. If you want to check, you can also go over this information. Alright. And then we have the annual report for 2018. Okay, so in a way, they have, the latest annual report is 2018. The latest audited financial statements is 2019. And then for 2020, they only have interim financial statements. Okay, they don't have the audited yet. Alright. Okay, so the annual report, they have these contents, messages, 2018 at a glance. Page 6, we're going to check that. A road well traveled, corporate governance, audit, and then the statements on 2018. Alright, so let's go to page 6, I think. So strong financials, they have this amount, 132 billion, premium contribution, increase in benefit availment, see benefits for children with visual impairment and developmental disabilities, they provided that. New and enhanced benefit packages, expanded primary care benefits, newborn care package, improved access and service facilities, right? PhilHealth and other government agencies form alliance for medical assistance, good for you. PhilHealth launches the first malasakit center in Iloilo. Increasing population reach, okay, it reached its 100 million milestone in terms of population coverage. Proudly declaring that it has already provided coverage for 98% of the population, or roughly around 104 million out of 106 million total projected population for 2018. Alright. Covered members and dependents by sector. So, largest, formal economy, we have indigents, informal economy, senior citizens, sponsored members, and lifetime members. Alright. And then the breakdown if you want to check the figures. Continued expansion of coverage to other segments of society, PhilHealth expands accreditation to HIV treatment hubs, health insurance coverage for persons of concerns. Okay. Have that. Intensified monitoring to protect the funds, better public perception. Dawn is rising. We'll see. Okay, and then they have this. Alright, I'm gonna skip these things. Alright. Okay. Corporate governance statement. Alright, so I'm gonna stop here, and I guess that's everything. The highlights we've already gone through the highlights that they have. So this is it for this video. We've only tackled the financial statements of PhilHealth, and later on, again, I'll be providing a more in-depth discussion on the financials of the various government agencies. So it's going to be like a review, more in-depth. We're going to provide financial statements analysis as well. Alright, so that's it for this video. Thanks and bye.